All right, we'll kick straight off. We are going to be recording it as well, but it looks like we've got quite a few on, which is really good for the short notice. So we'll get straight into it. It shouldn't take too long. Hopefully maybe half an hour. We should be able to get through most of it, but we'll see how we go. Just a couple of things. If you need to ask any questions or anything like that, then I think there should be a chat box that you should, or a Q&A box that you should be able to just write things into. Should be fairly straightforward to use. So if you need to ask some questions, then just fire away. But yeah, I'll just go through. I've got a small little presentation that I'll go through. It'll be mostly just a discussion, just about the changes to JobKeeper and how it's going to work moving forward. But yeah, if you've got some questions, then just fire away. So I think looking through the list, most people know who we are. There's a few that I'm unfamiliar with who's on the call. So yeah, we're Peer Wealth, accounting, financial planning, mortgage broking business. We've been working quite closely with about 150 businesses in the past couple of months about JobKeeper. So it's been pretty sought after subsidy from the government. It's been helping a lot of my clients and a lot of our clients get through the last few months. So it's going to continue, which is good. There was talk about it being cut out, but it looks like it's going to continue for the next 6 months after September, which is good in some shape or form. So let's get straight into it. I will share my screen and we'll rock and roll. Cool. So this is what we're going to be talking about. We'll quickly touch on what is the current JobKeeper scheme. Most people on the call are registered and we're looking after it for you guys, but so I think you know a lot about it, but we'll touch on that quickly because it gives us a good starting point. And then we'll basically just go through the changes. So the changes got released last week and the week before. So yeah, that'll be mostly what we'll go through. And there's a couple of questions that we'll touch on at the end. If anyone has any, just shoot them through and we'll deal with them as well. So, the current JobKeeper scheme. So it's obviously an incentive for small businesses to retain employees, which from my experience, that's been happening, which is great. It's keeping the unemployment rate quite low. It's a payment of $1,500 per fortnight per employee. So we have just submitted the July JobKeeper payments, which would have got paid in the last couple of weeks. So there's been the April, May, June and July. So there's been 4 months of JobKeeper subsidy payments come through for people who have been eligible since the start. It's the current scheme started on the 30th of March and it was due to end on the 27th of September. So a 6-month period. So I think there was 26 fortnights, 13 fortnights in that period. So yeah, we're 3 or 4 months through, so we've got a little bit to go. But then the changes are to come into effect after the 27th of September, although there have been some changes which we'll touch on as well for the current scheme. And to be eligible has been a number of criteria, but mainly businesses that have been impacted, probably due to COVID. So it's all to do with this decline in turnover. So for most of my clients, for all of my clients, it's just been a 30% drop in turnover test. We won't touch on the other ones, which is 15% and 50%. For all of my clients, it's just that 30% drop in turnover. So that's the current system in the current scheme. And yeah, most people I think on the call have been registered and are partaking in the scheme. So I guess you're kind of familiar with how it's currently working. Most of you probably just trying to find out what's going to happen after the 27th of September. One thing I'll just touch on, and it's been a question that constantly comes up. Once you're in the JobKeeper system, so if you qualified on the 30th of March or you qualified in April or May or June or whenever you've qualified, if you qualified, you're in the scheme until it ends on the 27th of September. You don't need to keep retesting or anything like that. If your turnover doubles in August or triples in August, it doesn't matter for the current scheme. you're in it to the end. So they won't turn off the tap until the 27th of September, and then you need to retest your eligibility. So that's just pretty important to know. So on, if we move into the changes, there's been a couple of announcements recently. So JobKeeper came in on the 30th of March. On the 21st of July, which was a couple of weeks ago, they announced a couple of changes, basically JobKeeper 2.0, which most people have probably heard of. It's basically just an extension of the JobKeeper subsidy for another 6 months, but we'll go through that as well. And then more recently, mainly to do with what's happening down in Victoria and how impacted they've been, they've made some refinements to the current announcements in the current scheme. So yeah, they later changed JobKeeper 2.0 due to what's happening in Victoria, but we'll go through that. So this was all basically as of about 5 days ago, so pretty fresh. It's all just announcements from the Treasurer. You'd assume that it all goes through Parliament and it gets accepted and it's all legislated and the like, but I guess at the end of the day, things can change and it's all just commentary at the moment. But the way the previous JobKeeper announcements were announced, most things have kind of flowed the way we were expecting, although it has been quite unclear, but we're pretty clear at the moment. So the main changes. Changes around employee eligibility. The payment rates have changed, so $1,500 is going down, which we'll go through. The dates have changed, so there's an extension, and the decline in turnover tests is important to go through to see if you qualify. So we'll go through all these things separately. So we'll get stuck into the first one, employee eligibility. So current rules and the changes. So these are the current rules. Basically, you probably know who your employees are on JobKeeper and who aren't. Most of the ones that aren't on JobKeeper are probably more like they're not Australian residents. So that's one of the key rules. Was an Australian resident, or they've got this subclass 444 visa, which is for New Zealand citizens. But if you're a foreign resident, then you're probably not, or you're not on JobKeeper, so they're probably the ones excluded. Nothing like that has changed, but this key testing point, so all the rules and the current JobKeeper scheme test your employees as of the 1st of March. I don't know if this is all that well known out there. Some of the JobKeeper 2.0 is quite well known now, but this change is a bit of a silent one or a sleeper. So current rules as of the 1st of March, if you're employed and you meet these criteria, then you can put that employee on JobKeeper. So the key with this is if they weren't a permanent employee or a long-term casual, so the ATO, the government said a long-term casual is a casual who's been working for the business for more than 12 months. So if they're not a permanent employee on the 1st of March, or they weren't a long-term casual on the 1st of March, then the employee is not eligible for JobKeeper. So the big changes, nothing in this section about foreign residency, Australian residency, the age of people or the like have changed. But the key change is that date of the 1st of March has been pushed back to the 1st of July. And that starts basically in the current JobKeeper fortnight. So what that basically means, if you employed someone after the 1st of March on a permanent basis, so you hired someone in March or April or May or June, anywhere up until the 1st of July, previously you wouldn't be able to claim them as an eligible employee, but now, as of today, in the current fortnight, you can put them on the JobKeeper system, which is a pretty big change. So go back, have a look at all your employees that are in the business at the moment. The ones who you're claiming JobKeeper for, they're fine. You don't need to worry about them. the ones that you aren't claiming JobKeeper for, just to go through this again. If they're foreign residents, just wipe them out completely. They're not eligible. If they're 14 years of age, they're not eligible. But if you employed them in March, April, May, or June, yeah, give us a call and we'll retest their eligibility, because they're probably likely to be eligible for JobKeeper now, and you can submit a claim for them. With the casual part, so previously, if they weren't a long-term casual on the 1st of March, so if they didn't start with you and your business before 1st of March 2019, they couldn't be a long-term casual because they needed to be working for the business for 12 months as of the 1st of March 2020. So if they started, I don't know, maybe in May 2019, and they're still working with your business and they're a casual employee, they're now considered a long-term casual. And because they've been with you for more than 12 months as of the 1st of July, as a casual, they could be eligible as well. So just go back through your employee list and yeah, just reassess everyone, and yeah, give us a call and we can add any new employees into your monthly declarations. There's a couple of things that need to get done with that. You need to get the forms completed. So there's an employee nomination form. So you need to get them to nominate as a eligible employee. So that form needs to happen pretty quickly in the next couple of days, next week or so. I think the government will be pretty lenient on that requirement because it is still probably not legislation. So it's still just commentary at the moment. But the other thing is, yeah, you need to think about if they are eligible, then you got to treat them like your other employees in terms of you got to pay them the minimum amount every fortnight. So if they're a casual employee only working 10 hours a week, only getting paid, I don't know, a couple $100 a week, they now get a pay rise to $750 a week, which is that $1,500 a fortnight. So that's just a requirement of the JobKeeper system. So that's one of the big changes. So that's not part of JobKeeper 2.0. That is a new thing that is already in play as of the current fortnight, as of the 3rd of August. So that's yeah, I think looking through all the ones that we're doing, there's definitely a few businesses that we're going to increase the employee count, the JobKeeper count for. So just have a think about that one. Next one, the JobKeeper dates. So this is all part of JobKeeper 2.0. So current system goes from the 30th of March to the 27th of September. And once you're in for the full 6 months there. JobKeeper 2.0 starts when JobKeeper 1 finishes, so 28th of September. And it goes in 3 months phases. So first phase is for September to basically December, 3rd of Jan. And then the next phase goes from January to March, so 3-month quarters. To be eligible for the second phase, you need to retest. You're not eligible for the whole 12-month period. You need to retest after the 27th of September. So that's one of the key things. So we'll go through what the retesting is about. But that's the key thing. And then the third phase, same sort of thing. Once the 3rd of January rolls around, if you're eligible for the second phase, you need to retest to see if you're eligible for the third phase. So you might be eligible for the second phase, but not the third. You might be eligible for the third phase and not the second. You might be eligible for the full 12 months. You might be not eligible in this 6 months, but then become eligible in the second phase. Although I would, if that's your situation, you're probably going to be eligible in the current phase as well, probably in the September quarter, just the way the rules work. So if you're thinking about enrolling in the second phase and you're not already enrolled, then give us a call and we'll probably enroll you in the current period. You're probably entitled to it now. So yeah, retesting applies to get back in. So that's the key. Not too sure how that's going to work, but I'm assuming it's going to be another declaration to the ATO that needs to happen probably in October, just to tell the ATO that you're continuing to be eligible and you're back in the JobKeeper system. And you'll need to tell them that you continue to be eligible. Cool. So that's the dates. The rates. So currently $1,500 a fortnight. Moving forward for second phase, September to January, it goes down to either $1,200 per fortnight or $750 per fortnight. And the difference between these two are, if your employee works for 20 hours or more, which we'll go through how that works, but if your employee works for 20 hours or more, they're entitled to the $1,200. If they're less than 20 hours, it's $750. So for October, November, December, $1,200 or $750, down from $1,500. And then the third phase, January, February, March, they've dropped it again down to $1,000 per employee for the ones that are working 20 hours or more, or $650 for everyone else. So they're slowly reducing the payments down, kind of phasing it out, but still paying the subsidy till the end. So they're the rate changes. In terms of how you test which employee is eligible for the $1,200 or the $750, there's this 20-hour rule. It's a bit of a funny one, but the way it's not, there's a bit of confusion. It's not if they're working 20 hours or more in the current month. So if you're testing this in, say, October and you're paying your employees in October, it doesn't matter if they're working 10 hours, 20 hours, 30 hours, 100 hours in October. That's irrelevant. The key date and the key period is February or June. So you need to work out the average hours worked per week during the month of February or June. And if the average hours is more than 20 hours per week, 20 hours or more per week, you're entitled to the $1,200. If it's less, it's $750. So that's the key, these 2 months. What they're currently working, October, November, December, is irrelevant. And you think about how that works and the way why they've done that. Some businesses might be shut, like in Victoria, businesses are closed, and that could happen in New South Wales, hopefully it doesn't. And if businesses obviously are closed, employees aren't working. So the current state of the business and the current situation of whether the employee is working or not is irrelevant. JobKeeper's to basically to replace and to get people off JobSeeker and get them off the administration side and the burden of Centrelink. But it's also to keep obviously employees engaged with the business that they're employed with. But if businesses are shut down and the employees aren't working, it doesn't particularly matter. They're still eligible for the JobKeeper, whether they're working for it or not. The key is if they were previously either working 20 hours or more, or if they were previously working less than 20 hours, and that determines whether they're entitled to $1,200 or $750. I assume it's going to be a similar sort of thing for this third phase, same sort of thing, the 20-hour rule for Feb or June. I think it'll just work for the full 6 months. So same sort of test. Got a couple of questions, well, one in particular that's a bit of a confusing one. And so it's if an employee was on annual leave in February, how do you work out the average hours? So yeah, if an employee was on annual leave in February, they obviously weren't working. So how do you work out how many hours they were working in February when you can't? Good question. I would have thought, so the test is either February or June. So if they were on annual leave in February, hopefully they'll be back working in June and you can use June. Otherwise, you probably have to maybe wait. I'm hoping, what are we now, the 12th of August. I'm hoping in the next couple of weeks, we've still got plenty of time to work out these next phases, so it doesn't start until October. But I'm hoping in the next couple of weeks, they'll release some information about that. You'd probably just use the reasonable test, and if they're working, I don't know, 20 hours in January or more, then you'd probably think that the ATO would be pretty reasonable with those sorts of things. But yeah, the detail of that is not out, so I can't really comment. But hopefully either they'll work in February or June, and they make the test. Either one is fine. You take the highest of either. The ATO are fine with that. So that's the payment rates and how that'll work. So you can put them in your cash flow forecast and your budgets. October, November, December, $1,200 or $750, and January, February, March, $1,000 or $650. So not as good as what it is now, but still okay. All right. Next one. The decline in turnover. So this has been probably the most complex. Some businesses are really easy to test. Some businesses are really difficult to test. So we'll go through it quite simply, because you can get into a lot of detail, and I'll probably talk for an hour on it, but it's probably missing the point. The current rules, basically, there's no changes to the current rules. If you're in, you're in. The way it was kind of working, well, the way I was working previously to test whether you're eligible or not, you'd either look at March 2020 versus March 2019. And because you're doing this, we're doing this with you in April, they were actual numbers. So you looked at your actual March results compared to March last year. And if you're 30% down, you're good to go. If you didn't pass that, then you look at April. Because some of the businesses were doing it for, you might have been testing early April or before the end of April, they were on projected numbers, and that's the way the government wanted you to test, all on projections. So if your projected April was lower than actual April last year, then you're fine. And it's got to be that 30%, sorry. So it's got to be 30% or more in a reduced turnover. That's still the same. The 30% number is still the same. So yeah, you're looking at April 2020 versus April 2019. If you didn't pass that, then you go to the quarter. So you're looking at the quarter of April, May, and June versus April, May, and June last year. So the projected April, May, and June this year versus actuals last year. And if you're projecting this current quarter to be down 30%, then you could reasonably apply for JobKeeper. If the actual results ended up being better than expected, which, to be honest, a lot of my clients' actual results have been a little bit better than what we were originally planning back in end of March, early April. Things were a lot worse back then. Businesses were closing and they opened up relatively quickly. So actual results have been a lot better. And the ATO won't have any issues with them if your projections originally were reasonable. So that's how the current system works, and there's no changes to that. And once you're in, obviously, I've said that before, once you're in, you're in. For the next phase, so from October, November, December, it doesn't look at projections. So projections are out the door. It's all on actuals. So you're looking at, this is what's changed. Previously, you had to look at the June quarter versus June last year, actuals, and the September quarter versus September quarter. And if both of them were 30% down, then you were good to go. Because of what's happening in Victoria, they said that's probably a bit unfair because Victoria just closed in July, I think it was. So their Junes might have been okay. Septembers are going to be completely rubbish because all their businesses are shut down, a lot of them. So they said, no, we'll scrap that. Let's just look at September. So it's a bit easier to qualify. So it looks at actual September results, quarter of September, so July, August, September, versus September quarter last year. And if that is 30% down, you're then eligible for the next phase. So it's on actuals, not projections. So you think about that. Some businesses will easily qualify because their businesses might be 50% of what they are before. So if you're looking at it today in August, you're like, yeah, it's pretty clear that our business is going to qualify. We're really hurting at the moment. Other businesses have rebounded relatively well. I was talking to a business this morning, and their business is down maybe 20% now from March last year. So their July numbers are about 20% down from July last year, but on the trend of increasing, which is good for them. But it's unlikely that they will qualify because August might be a little bit better, might be only 15% down. September might be only 10% down or better if they've had a good couple of months. So it's unlikely that they will qualify. Other businesses are borderline 30%. They're hovering around that 25 to 35%. It's very unknown at the moment as to whether they're going to qualify or not. So if you're in that situation, it's very hard to plan and to find out if you are going to be eligible because it's on actual results. So you need to wait until October. Once 30th of September rolls around, you jump into your accounting software, Xero, whatever it is, and find out what the actual results are and compare them to last year. And if they're 30% or more down, then you qualify and you would then continue with JobKeeper 2.0. If they're only 25% down or 28% down, you just simply won't qualify. It's not, they won't be lenient on that. It's all on actual results, not projections now. So you either qualify on actuals or you don't qualify. And that'll be the same for the next quarter from January to March. They will look at the December quarter. So the actual results for October, November, December versus actuals for October, November, December 2019. So yeah, the next phase looks at the September quarter, and then the phase after that looks at the December quarter. So yeah, we'll be testing these, reaching out to all businesses probably end of September, early October to see if they requalify. And then for this one, probably end of December, maybe a New Year's Eve phone call, just to see how you're going. And seeing if you qualify for the next phase, which will be interesting over Christmas. In terms of getting into the detail of, do you use cash or accruals? Is it, when you invoice clients or when you get paid from clients? If you don't qualify under the basic test, which basically looks at current year results to last year results, are there alternative tests available, which some businesses are new businesses. So the ATO have brought in these 7 alternative tests, which gets quite confusing, but probably worked through maybe 20 or 30 of them for clients, and they have helped quite a lot of clients become eligible who weren't eligible when you just look at April 20 to April last year. I think they probably will still be in play when you look at these next phases of JobKeeper. So if you're just looking at actuals and you think you're not eligible, potentially there might be other ways of looking at it to argue to the ATO that you are eligible under the alternative test. Gets a little bit confusing, and probably it's way too early to start looking at those things. But just think about that. If you're clearly under 30%, you're going to be fine to re-enroll. If it's borderline, we're going to be looking at end of September, early October. If your business is on the incline, you're probably not going to be eligible. That is that. That's the decline in turnover. So what to do now? They're basically the changes. So what to do now? Fairly straightforward. The one that's very, very urgent, I believe, which not many people know about, is determine if you have new eligible employees. So have a look if you have a new employee from the 1st of March to the 30th of June. And if so, if they're a permanent employee, give us a call and we'll register them. We'll probably do an email out just to a conversation with all clients just about that. But yeah, for everyone on the call, just have a look into that. And if you've got a long-term casual that weren't previously eligible because they hadn't been with you for 12 months as of the 1st of March, they might have been with you for 12 months as of the 30th of June. So that's another one that you might be able to get on the JobKeeper system, which will be good. And then for the other ones, just watch and wait and see. So see how the September quarter's going, see how July went, see how August is tracking. You can start planning to see, if your turnover is going to be down 30% or more. If so, you can budget in the JobKeeper. Good to go. If not, you need to make some tough decisions. If you're around that 28%, it's going to be a very, very difficult sort of situation to be in because your business is still suffering. it's probably not going to be able to afford to keep all the employees without JobKeeper. But you're not going to be entitled to JobKeeper, so you're going to have to restructure your business. Maybe get rid of some employees just to make it profitable, because without JobKeeper, if you're 28% down in turnover from last year, your business is still really suffering, but the government's not going to chip in any support for those types of businesses. So you're going to make some tough calls there. So they're probably the two action items. So just to recap, they're the changes. So employee eligibility, all around that 1st of March to the 1st of July dates. The payment rate's going from $1,500 down to $1,200 as of October, or $750 if they're not working for you for 20 hours or more. And then going down to $1,200 in January and $650 for part-time employees, less than 20 hours a week. JobKeeper dates, yeah, it's going until the end of March. So you need to retest at the end of September. And then the decline in turnover test, so it's still a 30% decline in turnover, but you're going to need to retest. So you're retesting that September quarter compared to September last year. They're the changes that have come into play at the moment. So Q&A, I see a couple of questions come through, which I'll have a look at. So Dean asked if a business has an employee that's eligible, has got another job, and they're eligible for JobKeeper. Yeah, okay. So the question is, so if you've got an employee who's an employee of your business, but they're an employee of another business, are they eligible for JobKeeper for your business? It depends. So an employee can only be eligible for JobKeeper from one business. See, they can't be double dipping. Or yeah, that's what the ATO are going to be checking as well in the next few months to make sure employees haven't registered twice, or businesses haven't registered for employees who've been claiming twice. So you can only register once. I think the rules from memory state that if you've got permanent employment with a company, then you should be registering with them if they're eligible. If they've got a permanent employment with one company and casual with the other, then they need to register with the permanent employee company or employer. They wouldn't be eligible under the casual system. If they got permanent employment with both companies, and they're both businesses are eligible because their turnover's dropped, they need to choose one. And once they've chosen, they can't change. So once someone's registered for JobKeeper with one business, if they resign, or if they get terminated, or something happens with them, they can't then go to the new job and register for JobKeeper for them. I'd have to I'll look into that, because now the rules, because previously it was 1st of March, if they weren't employed with the business on the 1st of March, they're not eligible. Now that's been pushed back to 1 July. If an employee was registered, it's going to get confusing. If an employee was registered for JobKeeper for a business and then left them on the 30th of March, for example, and then joined another business on the 1st of April, could they then enroll into JobKeeper with that business because they were employed before the 1st of July? Not sure. I'll look into it. If you've got that situation, then just let me know and I'll let you know the answer. Just jot that down. Another one, can two unrelated partners in a partnership get JobKeeper? So we haven't really touched on that today, but with the previous discussion. So we've just spoken about employees, and to be an employee, you're employed by a company on the payroll and those sorts of things. If you're a business owner and you're not employed by the company, you might be getting paid by distributions if you're in a trust, or dividends if you're in a company, or if you're a sole trader or a partnership, you get paid other ways and not as an employee. You can't be employees of your partnership or sole trader business. They have the other tests called the business participant tests. Basically, if you're the business participant, being either a shareholder or a beneficiary of a family trust or a partner in a partnership or the sole trader, if you're one of those people, you can be eligible for JobKeeper for that business, even though you're not an employee. You don't need to meet the $1,500 per fortnight minimum payment requirements or any of that stuff. The money just gets deposited into the business's bank account, and it's the business's money to do what it likes with it. But only one person, it's got a business participant. One business participant can be eligible under that. So 2 partners in a partnership, only one person will be eligible for the JobKeeper. The other partner won't get it. It doesn't mean that one partner kind of misses out and one partner gets the $1,500 a fortnight. They can still come to an agreement and split it, because the $1,500 will get paid to the partnership, the business, and then the business decides what it does with it. It doesn't have to pay that partner who's registered the $1,500. They could split that $750 each if they wanted to, or they can just leave it in the business and pay rent or whatever. Another question, can an employee that has resigned for 1 month but was on JobKeeper with me and is asked to come back be reinstated to JobKeeper? Can an employee that resigned for 1 month but was on JobKeeper with me and has come back be reinstated? So in the early stages of JobKeeper, it was pretty easy to do that because it was all moving very quickly, and when April happened, all businesses were closed and they basically laid off or reduced staff hours and those sorts of things. They might have terminated employees alike, and the ATO were pretty comfortable with, if you did do that, you could put them back on and continue them with JobKeeper. So it didn't matter if you terminated them on the 30th of March or the 1st of April or whatever. If you put them back on, I think you had to do that by the 30th of April from memory. If you put them back on the books by the 30th of April, you were okay. It wasn't an issue that you terminated them, because one of the key requirements of JobKeeper is it's a reimbursement system. So you pay the employee first, which is causing a number of problems for my clients, but we won't get into that. You pay the employee first, and then the government, the ATO, rebates you at the end of the month or the following month. So it's a reimbursement. So you need to pay the employee first. So they gave you a safety net and a buffer to back pay employees for that April month, if you hadn't already paid them. For this question, I think it depends on if they were reinstated before the 1st of July, because that date has now been pushed back from the 1st of March to the 1st of July in terms of them being a permanent employee of your business. If they were reinstated, say they resigned in April and then they were reinstated in June, I think you would be eligible to put them back on JobKeeper now, as of the 3rd of August, as of the current fortnight. I can't see why you wouldn't be able to. If you reinstated them in July or August, I don't think you would be eligible. I think they need to be back employed by the 1st of July. That's what I think about that one. That one's all good. What's this one? Just got a text with one. What happens if I accidentally paid employee $750 gross instead of $1,200 a week and they worked over 20 hours a week? Yeah, you can, the way I don't know if it's the right way or not, I've been pretty practical with businesses that have short paid or overpaid or something like that employees. So the requirement is you need to pay them $1,500 a fortnight. If you realise a couple of days after, a week after, that you short paid someone or you didn't meet that requirement, I think the ATO will be pretty reasonable. You'd hope they'd be pretty reasonable in saying if you pay them a week later or something like that, then you'd be okay, as a kind of a back pay. Even though the rules don't say that, I don't think they're they're out to catch those types of businesses that are just simply making a mistake like that. If you're fixing it, they're more after the ones that are trying to rort the system and get entitled to get JobKeeper without being entitled to it. So I wouldn't be too stressed about that one. Another question here. In October, do I need to get employees to sign another employee nomination form? If you're already registered and they've already signed the form initially, I wouldn't have thought so. I think if they've already, I wouldn't have thought so. If they've already signed the form and they're already enrolled and they're already eligible and they're already getting JobKeeper for your business, I don't think you'd need to get them to sign a new form. But I guess that'll come out later, but I can't imagine them doing it. If you've got new employees that are eligible, or if you're newly enrolling in the business in JobKeeper, then yeah, you would need to. That looks like the majority of the questions, which is good. That's about everything for today. So thanks for signing on. Hopefully that's made it a little bit clearer. We'll probably do another one in a couple of weeks or a month or so once the government has released some more information. But yeah, I shouldn't say I wouldn't have thought things will change too much, but they probably will. They always seem to do. They keep us on our toes. So yeah, thanks for signing in, and enjoy your evening.